total household debt balance composition, I've shown you this before, whether you're looking at mortgages, student loans, credit card and car loans, and everything else, everything's escalating. Everything is going to the point past what we saw during the financial crisis, and people are unable to pay off their debt. Why? Because, well, I mean, I heard that the wages are higher than they've ever been, and the economy is booming, but wait a second, there's more mortgage debt. People take on average 8 years to pay off their vehicle. I mean, what's happening here? I mean, student loans, it's at, what is it, $1.5 trillion or so? Well, the economy, it's doing well. I thought they promised me. Well, I guess reality is different than what I've been told. All right, back to reality here. Looking at the VIX, I told you in late January, the VIX moment was just like a firestorm. It was just huge damage to the stock market from the VIX, out of all things. Anyway, everybody was shorting the VIX. It was an easy trade. And then everything changed in such an instant. And we saw this. You could see the green portion right here. Everything changed, right? Suddenly that wasn't good anymore. Everybody wanted to stay away. But we're actually now worse than we were just before the VIX issue happened. The amount of people that are now speculating, it's going to get worse. I'm sure it's going to get even worse than what we saw throughout 2017. And people are going to get burned again. Whether it happens, because of the VIX itself, or whether the VIX naturally rises because of some crazy thing that occurs, we're going to have a big problem. And then the markets are going to crash, and that includes the US. But when's it going to happen? Today? No. Tomorrow? I'm not sure. But you have to be the one to decide where you put your money, where you want it, and is it really safe in these financial markets, knowing all of the information. You have to decide. Commodity prices. This has been quite interesting to watch commodities leading up until the financial crisis, as well as how it's behaved ever since. I mean, whether we're looking at oil, we're looking at industrial metals, everything, we can see that commodity prices, obviously, they're so important, number one, but they're also very volatile, and it's important to watch them. They have come down significantly from their peak in 2008, but many would say that that was very overvalued. Today, according to this chart, it's much, much below the average. So that could mean that we could see a rise here. I'm not too sure what we're going to see. When I look at this, I have to worry about how, if we're going to end up in the same situation, basically, that we have this massive, massive rise in commodities, and then that leads into a crash. I don't know what's going to happen with oil. Oil, last time I checked, was around $70 a barrel. The more tensions there are, the further this could be pushed up very quickly, not just with oil, but others, because they're worried about, will this, the general way that things are flowing coming through this location, Strait of Hormuz, or maybe it's because of an earthquake in Chile, whether it's going on in some other country that all of these trade routes are disrupted, what's going to happen, and so on, okay? So be very careful as to what's going on in terms of the geopolitical issues. Fewer potential homebuyers due to higher mortgage rates. Very clear, very obvious. This is showing us that it's the lowest since 2008. That's according to the UMich survey, good time to buy a house. Now, I've got a problem with this because we're seeing right now mortgage rates, historically, they're not very high. They're actually relatively low. And this is showing us the 30-year fixed mortgage rate in the United States being at about 4.5%. That isn't high. I mean, think about it. It's 4.5%. They've been much, much higher, and we're not talking about, going back to 1980. I'm talking about just historically. 4.5% isn't high, and yet that is such a heavy, heavy burden on people. If that moves up to 5%, okay? So if it goes from 4 to 5%, the amount that people pay on their monthly mortgage is significant because the homes are so expensive, and the mortgages that they get, they're putting 5% down, they're putting 25% down, whatever it happens to be, and we've got an issue. We've got an issue there. Nobody's really worrying about it, but that's a lot of mortgages that are tied into all these collateralized debt garbage. And that's going to unravel. But you know what? What do I know? If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. That's all you got to do. Just hit that thumbs up button. It's going to help to support me. You can comment down below. If you don't know what to comment, just say hello. Just say, a word, any word. It's fine. I'll reply to you. I'll say thank you. And this helps the channel grow. That's it. That's all you got to do. Very easy. Now, if you want to join over 140,000 other like-minded individuals, hit that subscribe button. This channel is going towards 150,000 subscribers this year. We're rooting for 150, not for any other reason other than to show us all that the truth is really out there. A lot of people are stuck in the mentality right now that the mainstream media is projecting the truth, and we need to get out of that. So when you join this channel, you will see what the real truth is, as boring as it can be sometimes. I know that there are many people out there in the world, every country around the world, listening to me right now. I just thank you all for listening. It's really just an honor. And you can check my books out if you're interested. Links are in the description. Take care.